This is Jack from Alpha Charts with a state of the market video. Today is January 7th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you haven't liked and subscribed to my channel yet, please do that right now. Take a moment. I do appreciate that. And follow me on Twitter at AlphaCharts365. You can find me there. I post sometimes scans. I sometimes post a lot of charts all week long. I'm posting all kinds of interesting things. So at Alpha Charts 365 on Twitter. Okay. Getting to the charts, S&P 500 had a follow-through day accumulation day on Friday, and stopped right at the 50-day moving average, but this little triangle here, or pennant, this little pennant here, because the prior trend was lower, the expectation was this would resolve lower. And so far, it's resolved higher. Now, remains to be seen whether we get follow through on Monday or not, even higher or not. But definitely something the bulls want to see. And it makes another higher low. So this low right here is now very, very important. But in the end, still declining 200-day moving average, still underneath the downtrend line. These moving averages now are kind of mixed as far as they go, but price is still under the 50-day. So I'm still in the boat so far for S&P. This looks like a counter trend rally within the context of a larger downtrend. Now, excuse me. Now, I just woke up. Now, if price decides to chop around or even get above the 200-day over the next month, right? Over the next month, then this 200-day will start to flatten, right? Because when we go back 200 days, we're talking to right there, right? That's 200 bars, 200 days, and that is on March 22nd. So in the next 15 days or so let's go to what's 185. Yeah, at 185 you're going to start to get rid of this data right there, right? And very quickly in February, if price can get above this 200-day, it will start to flatten and potentially even move higher. Again, the price would first have to break the 200-day and would most likely have to break this downtrend line. We're not there yet. That's just one potential scenario. That's the bull case. The bear case is easy. We come back, we retest, whether it's the 50-day, the 200-day, or the downtrend line, and fail miserably and break this low, right? That's the bear case. So right there in a nutshell, right? For S&P, bull case, bear case. We'll see what happens, but right now I think it's likely that we get follow through the upside. Usually on strong days like this on volume, that's what usually happens. That's what we've seen in the past. With other kind of pennant type action, notably right here, this is kind of similar-ish in a lot of ways to this area. So we'll see what happens, but S&P looks good. Definitely a positive outcome. Also, on the week, up 1.45%. On the first week of the month, it's really positive. On first week of the year, January, the first week of January, to be green bodes well in general for the rest of the year. RSP was up even more by that 2.82%, right? And I was talking about this potential bear flag that was in there. But we take that out. There's no bear flag happening. So let's see if RSP, which is now back above the 200-day, right? Which is really nice to see. 200-day may start to flatten out faster in the equal weighted. Again, Apple, Amazon, so on and so forth, Tesla are keeping the SPX and the other main indexes that are cap weighted down, whereas we're starting to see a lot more positive price action in the equal weights. Because under the surface, people are buying, and they're buying a lot. So, nice day over here, 2.4% versus again SPX, which was 1.8%. I'm sorry, 2.28 was SPX. So they both had very positive weeks. RSP, yeah, very, very positive weeks. So again, strong weeks on both of them. But I think this looks, RSP looks like it may actually start to lead out of here. Look how important, right? That all these moving average convergences, right? That is, 142, right? Price above 142, and things are looking really, really good. So there's RSP on the Qs. Same idea. We had this kind of bear flag look to it. Still did not make a lower high. Lower low. Did not make a lower low right there, which is a positive, intraday or not. And had a strong day on volume, which is nice to see. And we've had one here, which is nice to see. Now we have one, we have two, a little bit different. Still underneath all of its moving averages that count, and they're all moving lower. So again, to me, this is a counter trend rally until we can get above. We got to get above, 50-day first, right? There's a 23-day, 50-day trend line. 200-day will probably be in the vicinity of the trend line and this overhead supply area. So, got to get back above 300 before we can. It was a 10% move, right? Heck, this thing could blast 10% and still be in a downtrend very easily. So just be aware of that, okay? On the week, this was up 0.95, so almost 1%. Equal weights were up 2.16, so double that, right? Double that. And again, equal weights are looking better than the cap weighted, right? We're seeing that it's intermingling with this 50-day now. They're starting to get bunched up together. 200-day isn't that far above, right? Just a couple percentage points above. So things are looking good, as far as trying to get above the 200-day, making higher lows, especially on the equal weights. Very, very positive. Let's go to IWM. What does that look like? Okay, again, very similar bear flag that should have resolved lower that didn't. Hasn't quite made it to the 50-day yet. Had a head and shoulders that, again, did not confirm, right? Did not confirm. Doesn't mean it's out of the woods. Doesn't mean it's not going to. It still has to get, again, above the 50-day, above the 200-day. But that's all going to be, sooner than later, because here's March. And again, by the end of January, all this data will then be off the charts, right? And if price can get above that 200-day, as this is being removed from the chart, you're going to start to get a flattening 200-day moving average. Big positive. 200-day has been flat since here, right? Over a year, right? That's the last time 200-day has been flat. Has been uptrend since November. So that's definitely something to keep an eye on. Okay, is getting price above this 200-day as this data comes off the charts. But overall, positive price action. Nice little accumulation going on here in the IWM. IWO, similar enough to the IWM. Again, nice accumulation days kind of showing up. And again, price again has to get above 223.45 as, let me see, where's probably right in here, right? As this data comes off, right? We'll start to get the flattening only when price gets above this area though, right? Again, you have some issues up here. There's a lot of dead bodies in here, a lot of overhead supply. So don't think it's going to go straight up. No way. If this is the start of a new bull market, right? And this was the bottom, which we don't know, like it's going to be choppy. It was kind of organized on the way down, choppy on the bottom though. This chop is what bottoms are made of though, right? Misdirections, moving back and forth. So I know everyone's saying that there's supposed to be a recession, and the narrative is that, things are going to be terrible this year and so on and so forth. Let's just watch charts and keep going, right? Mid caps have been the strongest, and this kind of complex inverse head and shoulders is looking good. Look at how it's above all of its moving averages, including the 200. Love that, and going back to March, as this data comes off over the next few weeks, the 200-day may actually start to be going higher. Very, very strong looking chart on the index level, especially compared to the other ones. This is, again, some accumulation days all throughout here. I mean, look at all these accumulation days that have been really showing up on the charts. So mid caps by far look the best. And I think that's a bullish sign too, right? Because mid caps are the sweet spot, right? They're the 2 billion to 100 billion ish, depending on where you put it, companies. And so those are the companies that are really they're big enough to not go out of business, most of them, but they're not. They still have a lot of runway and growth ahead of them. So my favorite companies to be a part of are mid caps, and I love to see the mid caps are outperforming the general market by a lot. So all of that is looking great. Let's look at the ETFs that are important to me in financials. Super important. There's your complex inverse head and shoulders, and it's trying to break out. Financials trying to break out. That's important. Again, this data will be coming off over the next 3 weeks. So I'm not expecting this to go straight up, but if it could chop around, get rid of this data, and maybe start to come out of $36, you have a flattening to rising 200-day moving average, a lot of positives. And again, this is starting to align bullishly, right? Can you see how this would be, especially if it gets up here and kind of chops around, gets a little, nasty, then tightens up. This would all give it time to get these moving averages higher. So again, it may pop up again to 36-ish, then maybe it chops around, and then maybe higher. That's the bull case. And right now, we should be talking bull case because we have higher highs and higher lows off the bottom. We have moving averages is starting to align. So I think financials look very nice. Semiconductors, one of my most important ones. Now we drew in this potential inverse head and shoulders that it wants to maybe potentially build. There's your 200-day still declining. There's March right there, just like we were talking about. We'd love to see these really start to move higher. And start to align bullishly as well as it tries to make its inverse head and shoulders. Semiconductors have to participate. Just like the financials, they don't have to lead. None of these have to lead, but they have to be moving in the same direction, right? And so, you can kind of just try and see where I would put my trend line. It's tough. There's not enough touches. Maybe this is not the right spot. Maybe we go off of here. Yeah, still not loving it. So I don't love the trend line. Not a clean trend line to place there. But again, I would love to see it, price make this inverse head and shoulders set up as this data over the next 3 weeks, as this data comes out. And then February could potentially be a very, very strong month if all that happens. Now, again, the bear case is obviously this all falls apart at the 200-day and we continue lower. And that would be in what has happened every time in the past. But again, it's a bottoming looking at pattern. This looks more like a bottom than a top to me. And there is a case for the bulls. So I'm going to be optimistic and bullish. XTN still under this general trend line, still under the 200-day. Again, higher low. So we'll consider that, right? It's the first time we made a higher low in a long time. And again, this is transports, but same thing. Where's March at? March is back here, right? So this has weaker than most, right? The transports are weaker than most. So we definitely want to see transports participating. Hasn't been done yet. That being said, we've had some, good, strong move on Friday. So maybe that's the start of something. About 4 or 5% above is that 200-day. 50 days literally right above, about 1%. So I definitely could see a retest of the trend line and the 200-day, and then we'll see, does a higher high get put in or no, right? Because higher low, we'd love to see that higher high. It doesn't, again, transports don't have to lead, but they have to be going in the right direction. We don't have that yet for transports. And the last one will be home builders. Here's your home builders. And again, held where it had to hold. Looks more like the mid caps, right? Above the 200 days. The first one we could say, actually, XLF was above the 200 day too, right? But XHB is the home builders. Bodes really, really well. I think that home builders are doing well. They're going the right direction. So have to break out, right? That's not a foregone conclusion. Again, here's your March data that needs to get taken out over the next month. So I'm not expecting, again, anything to V-shape, but this is already aligning up bullishly as well. So you have financials and home builders above their 200-day. That's huge. You have SMH that looks like they're starting to move. Good volume, good accumulation coming in. You can see since the bottom, this has been nice accumulation. And then you have a little bit weaker, the transports, but a good start right there. So constructive price action on all the ETFs, right? It's only one day, it's a Friday, but it's very constructive. And so we will go up again. And right now, this is setting up for that potential on the ETF level. As far as the internals go, let's just go ahead and switch that to the line chart and get rid of this and take the volume off too. The VIX, VIX is still in that bullish range. So it's not doing anything wrong, not doing anything right. It's just doing what VIX does, I guess. Still in that range. The put call ratio is still in range. Again, we have these outliers here, which I'm not sure what to make of it yet. But that was crazy moves. And again, maybe they're just outliers. We'll find out. But right now, we'll call it no decision in the put call ratio as far as sentiment goes. You have some people that say market's never going up again. Some people say market's never going down again. You have some people saying this is a bear market, this is a bull market. So that's why sentiment is mixed. Okay. What else we have? Gold is there's a couple of things that's interesting. So copper breaking out. That's interesting, right? So if we are, meaning the market is going much, much lower, like copper would not be breaking out, in my opinion. Copper is breaking out. That is, I think, something definitely on the bull side that maybe people aren't talking about, right? Because copper is, in my opinion, a bullish indicator. The dollar, which should be kind of shooting up, really isn't, and you're starting to get that, move lower, kind of cross. This little wedgie type pattern really didn't work out. And again, it could just move sideways here, right? Who says it has to do anything? Maybe it just moves sideways, in a range, and that's okay too. We get TNX. So you see the yields are starting to fall back. We're right at 3.57, we'll call it. That's very, very positive. Lower highs, right? Lower lows. We'll see if another lower low is made. But yields are falling. I mean, people are going into bonds because probably for the yield, which is starting to, come back down now, right? Because of bonds, right? Look at TLT, right? People are going to bonds because you're getting yield from them. And looking at the bond yields, which I forgot to before. You know what? You're seeing this just as tightening, still in the range. So we still know what's going on with this, but right now it's on the bottom end of the range, kind of false breakout of this trend line, if we want to call that a false breakout. But again, the tightening continues in credit spreads, and so I think that's a big important development. And Bitcoin's just dead, man. Like there's no volatility at all in Bitcoin. I've never seen this happen before, which is kind of interesting, right? Maybe Bitcoin is starting to be accumulated again, right? Who knows? But right now, nothing is going on in Bitcoin since November. 2 months of sideways, just tight action. Maybe that's what bottoms look like in crypto, right? So in the end, definitely positive price action on Friday and the first week of the month. I think it bodes well for the rest of the year. Again, the January The month of January, again, as a whole, will be important. Price still has a lot of obstacles. There's still a lot of supply in this area. So I don't think it'll be a V recovery. But I think as long as, again, we have new lows to manage risk against, and I think that the bulls have the ball right now. Whether they can advance it and take out these important markers remains to be seen. But equal weights look good. The important sectors, including copper, looks fantastic. Even with gold going up, that doesn't bother me at all. Gold is ripping to upwards. That's fine. S&P is looking really strong. Going against the grain, right? Against the grain. And again, all of these, if it can come into, even if it kind of just drifts higher, right? It would take out the March data. It takes out the March data. And then you start to get that flattening. Price gets above the rising 200-day. We're near this trend line. Very easily, all that can be reversed. I don't care. Fed pivot, Fed doesn't pivot, Fed pauses, whatever that happens. That's all maybe if, when, we don't know. The market thinks, and I do too, the Fed is coming to a pause in the rate cycle. That would be my guess, right? Well, that's what they're saying. They're coming to a pause. They're going to raise once in February and once in March, and probably 0.25 basis points, right, each time. And then they're going to pause and digest and see what happens. So I think that is starting to be realized ahead of the market's realizing it ahead of the pause. And so that's what we're seeing. So again, I think, why not play the counter trend rally? And then if it ends up being more than a counter trend rally, well, then you already have whether a small or medium sized position going into here. And then when you add to it, you can then have a really, really strong position in whatever names or ETFs that you're considering. Just a thought. Hope you all are doing well out there. Good luck. Tomorrow I'll do a stocks to watch. Follow me on Twitter at AlphaCharts365. And thank you very much. Bye.